All right, so gold 543, and everyone's asking if we're at peak gold, peak silver, some kind of bubble or mania. Short answer, that's not what this is. This is symptom of sick currency system breaking down incrementally, then exponentially. And the ones who understand the difference between bull run and bubble see something completely different happening. OG John AG here. If you're new here, you probably clicked with suspicion. Good. That's exactly the mindset you should have. I don't want blind followers. I want people who verify. Most viewers who stay are the ones who came skeptical, checked my sources, and realized it's not hype. This isn't propaganda. The establishment, banks, mainstream media, corrupt institutions actively wants you not to see this data. They profit from your ignorance. But here's the thing. I'm not asking you to trust me. I'm asking you to verify. Check the comps reports, read the COT data, look up the JP Morgan settlement. The ones who do, they stay, because the data is undeniable when you actually look. Drop OG John AG in the comments if you're one of the ones who actually verifies. Current prices, Silver Western Spot 77.7, Futures 77, Shanghai Spot 86, Futures 88, $9 premium holding. Gold Western Spot 5,043. Silver crashed from 121 down to current levels. Gold holding above 5,000 after historic weekly close. Check exchange data yourself. Continuously updated, publicly posted, completely verifiable. Here's what everyone's missing. Gold and silver prices aren't signaling mania and metals themselves. They're signaling complete dysfunction of global currencies in general and US dollar in particular and sovereign bonds they represent. That's more scary than tech stock bubble, more scary than mispriced mortgage securities. This is symptom of things discussed for years. While gold steadily outperformed risk assets despite bubbles in those assets, Adam Ferguson wrote, "When money dies," showing how Weimar citizens who held physical assets survived while paper promises evaporated. Majority always learns this lesson too late. We've gone from incremental rise in gold and silver to exponential questionable rise. What we're seeing is karmic reality from 1971 to today, where debt got too high. Debasement of currencies to monetize that debt went too far. When you weaponize that currency and IOU, it accelerates. Really, we're seeing symptom of sick system, sick currency system. That itself is scary. Doesn't mean gold and silver only go up from here. We're far from peak gold because there's no easy solution to saving paper money. Even world reserve currency not immune from sins of fantasy that you can solve debt crisis with more debt. Monetize that debt with mouse clicks from nowhere. Weaponize that debt. Then expect world to buy that sandwich for decades, like they did in 70s. Gold-silver ratio, currently 65:1 historical ratio, 15:1 Kongs vault ratio, 1.11 mining ratio, 1.8 LBMA vault ratio, 1.3 available above ground ratio, 1.1 physical reality will take over pricing mechanism soon when every metric shows silver undervalued relative to gold by factors of 4 to 11, depending on measurement that spread represents either permanent revaluation coming or largest arbitrage opportunity in commodity markets. Prince has a documented track record calling for $180 silver by year end despite the current 77. She called 2,500 gold and it hit, called 3,000 gold and it hit. Now she is predicting a 117% silver gain despite volatility. Her track record speaks for itself when past calls materialized exactly as forecast while the consensus was wrong. This isn't speculation. This is pattern recognition from someone who's been right on major inflection points. Commitment of Traders report shows managed money positioning on long side evaporated, positioned now at levels not seen since February 2024. That's when managed money was massively short right at beginning of biggest dollar move higher for silver. Managed money can be contrary indicator when institutions position one direction aggressively. Informed players often take opposite side, knowing crowd psychology creates exploitable extremes. Check CFTC COT reports yourself, released every Friday. Free public data, specific positioning breakdowns by category. Physical demand for silver remains strong, ignoring recent volatility. SHFE plus SGE stockpiles down 90% over last 6 years, down roughly 50% just since 2025 alone. Ultimately, physical silver demand sets price regardless of paper manipulation attempts during temporary windows like Shanghai closure. Silver needed for military and AI applications. U.S. declared AI matter of national security. U.S. declared silver critical mineral, considering stockpiling it according to strategic analysis. This means securing silver supply paramount regardless of price when national security implications override market economics. China, biggest consumer and exporter of silver, enacted export controls will tighten them further if domestic production threatened. Supply remains tight structurally. Peak silver supply was 2016. Roughly 70% comes as byproduct of other mining. Deficits piling up 5 consecutive years. Rising prices won't incentivize zinc mine to increase production, since silver is byproduct, not primary economic target. Gold increasingly treated as monetary refuge as trust in fiat currencies and sovereign IUS continues eroding. Short-term price swings don't alter long-term direction of monetary metals. Since 1971, every leader, left or right, has spent well beyond GDP and tax receipts, creating moral hazard at Fed. Knowing central bank will mouse-click money to save system allows politicians to think they can have deficits without tears, print with impunity, debase currency, misreport actual inflation to masses being robbed in great wealth transfer. Charles Mackay wrote Extraordinary Popular Delusions and Madness of Crowds, documenting how group psychology creates bubbles and panics throughout history. But what we're seeing now isn't crowd euphoria in metals. It's incremental loss of faith in paper money that's accelerating as more people recognize systems' mathematical impossibility. Gold and silver rising because currencies debased mean real money and hard assets going up by definition, not speculation. Precious metals, unlike any other investment you've made, there's metaphoric red sign hanging above them saying, "Do not invest in these courtesy of government." Sign comes in form of fees and taxes no other investment bears. Extreme volatility, largely artificial. Social stigma, as though you're crazy to even consider them. Most people give up somewhere a long way because only interested in making more dollars. And there are easier ways to make more dollars. Only those who realize we're sleepwalking into tyranny and physical gold and silver, our best tools to preserve liberty, will endure. That means paying premium to get money out of system. Means watching with frustration how official price gets knocked down again and again with no reasonable explanation. Means getting strange looks from banker or being laughed at by friends and family. They stopped laughing during 2025, didn't they? Above all, means having faith in yourself and decisions after studying carefully. When silver allowed to find true price discovery based on supply and demand, it will be explosive price being managed by fake paper. Currently, expect shenanigans while Shanghai closed, creating manipulation window when Eastern physical buyers disappear temporarily. Pattern documented historically during past exchange closures when coordinated suppression maximizes downside without real absorption from largest physical demand center globally. Here's the reframe that changes everything about monetary reset timing. We don't know exactly when what gold 5,000 and silver movement signal is signpost and warning of what's coming. It's symptom we can identify. Problem isn't gold being terrifyingly high. Problem is dollar and paper money being desperately rotten, fiat money incrementally losing trust, credibility, purchasing power by death of thousand cuts before exponential phase begins. Policymakers caught between impossible choices. Choose between saving bond market, which is everything in debt-based system, or killing currency. Or save currency by letting rates rip and dollar strengthen, which kills trade exports and surpluses. Since we live on debt, we're not letting bond market go, so we choose lesser of evils. Kill currency, misreport inflation, tell masses being robbed, it's fault of some external bad actor or unforeseeable event to justify whatever narrative comes next. Ray Dalio wrote Principles for Navigating Big Debt Crisis, explaining how systems that accumulate too much debt face inevitable deleveraging either through currency debasement or default. We're watching that play out in slow motion before it accelerates violently. Central bankers buying gold, now loading guns before combat, getting ammunition while they can. Don't like central banks, but watch what they do, not what they say. They're stacking for reason. That should tell you everything. Gold is cheap. We are early. Gold physical ETF holdings have yet to reach 2022 high, despite price tripling from 1.9 thousand to 5,000. Almost no one accepts central banks participating. Retail and institutions selling ETF shares while price triples. That's not speculative mania. That's fundamental revaluation without crowd participation happening under radar before masses recognize what's occurring. Retail allocations to gold still less than 1%. Big money movers are central banks. When sophisticated institutional money and wealth preservation clients buying physical while retail selling paper exposure, that divergence tells you who understands what's actually happening versus who's trading price movements without grasping underlying monetary transition taking place in real time. Wealth preservation clients not looking to make more. They're trying to stay rich, not get rich. They know melting ice cube, even if Swiss franc or euro or dollar, not best way to stay rich. They're not speculating anymore. They're saving and precious metals when need liquidity for purchase converting to fiat. But understanding gold and silver are money, not speculation on price appreciation. You don't sell money. You use money when purchasing power. Preservation is primary objective. Bearish case matters because reality includes both sides. Gold 5,000 could pull back violently as parabolic moves. Correct. Silver 77 hasn't reclaimed resistance, showing technical vulnerability remains. Analyst predictions like 180 year-end are forecasts, not guarantees, even with strong track record. Historical ratios reverting to 15-1 assumes past patterns repeat, which markets don't guarantee ever. Managed money, contrary indicator status means reversal timing uncertain even when positioning at extremes. Physical fundamentals strong, but COMX has contained delivery pressure repeatedly through decades using contract rollover and cash settlement enforcement. Paper manipulation persisted before it can persist again. Wealth preservation mindset works for those with wealth to preserve, but doesn't help those trying to build wealth through speculation. This is financial warfare education, not investment advice. But here's what data actually shows. Gold-silver ratio 65 versus historical 15 and physical metrics showing 1:11 COMX 1 TO8 mining 1.3 LBMA 1.1 above ground. Analyst who called major moves now forecasting 180 from 77. Cody managed money at February 24th levels right before biggest move began. SHF plus SGE stockpiles down 90% 6 years, 50% since 2025. Physical demand strong with U.S. declaring silver critical mineral and AI national security priority. China controls exports will tighten if threatened. 70% comes as byproduct, so rising prices won't incentivize primary production. Gold treated as monetary refuge, not trade as fiat trust erodes. Gold 5,000, while ETF holdings down, shows only central banks participating, meaning we're early before retail. Precious metals have red sign hanging above them from government through fees, taxes, artificial volatility, social stigma. Only those who see tyranny coming and understand metals preserve liberty will endure paying premiums, watching manipulation, getting strange looks while finding inner peace to ride storm. When allowed true price discovery based on supply demand, it will be explosive because price currently managed by fake paper. Bottom line, verify gold-silver ratio versus historical and physical metrics. Check analyst track record on past calls. Pull COTI managed money positioning versus February 24 comparison. Confirm SHF SGE stockpile declines. Look at gold ETF holdings versus price showing crowd absence. Understand wealth preservation mindset versus speculation. Recognize symptoms of sick currency system, not bubble in metals themselves. Watch whether physical reality forces pricing mechanism shift or paper system maintains control through next cycle. Watch if managed money contrary indicator signals reversal timing. Watch Shanghai manipulation window during closure. Watch if crowd participation begins or remains absent. Watch central bank accumulation continuing. Invest with logic, not hype. OG out and about.